Good afternoon, everybody. Thank you for joining us today. My name is John Fitzpatrick, Regional Vice President with John Hancock. And I cover the state of New York, also Ohio, Tennessee, and Kentucky. So I have a big territory, but love covering the state of New York and our partners at CAFL with a phenomenal relationship that we've enjoyed for years, and great partners and friends over there. And we are helping them, and we've been privileged to be part of their learning series to present topics to their advisors and employees. And so this is one of the in a series. And so we're really happy today to bring you a great topic, a really important and germane topic today in our business for sure. And that is business succession planning beyond the basics, as the title indicates. And with us today, I have my associate, and I'm really privileged to have her here today, and so happy she could join us, my buddy Anna Canelos Medinacelli. And Anna is an advanced marketing director for us at John Hancock. One of our crown jewels at John Hancock is our advanced markets team. I'm biased, but I think it's the best in the industry. They do such a phenomenal job. Anna is a key cog in that machine, I will tell you. Does a great job not only creating content and ideas, but be able to deliver it effectively and to help all of us do better in what we're working on with our clients and bringing value. So with that, I am going to let Anna take the reins and give you a phenomenal presentation. So Anna, it's yours.
Thank you so much for joining us today. Yes, we're going to go on a journey regarding succession planning, also known traditionally as buy-sell planning. This is one that is top of mind, and I will be covering a recent court case that's sort of creating a lot of buzz in the industry. And so I'll walk through sort of what's happening, what are some ideas, right, that we can help navigating some of this new space now that we do have the Supreme Court actually making judgment on buy-sell planning. So we'll cover that momentarily. But before we get started, I always like talking about why. Why is succession planning important? And I think that, at the core, this is about legacies. It's about protecting, for any business owner that you speak to, or even yourself as business owners, that becomes truly important. It becomes part of your family. And nearly 66% of business owners do not have documented or communicated succession plan for their businesses. And 78% of these business owners say that their business is the most important asset and protecting it is their long-term goal. So something's not reconciling here. And about 51% of US businesses are owned by baby boomers, right, who are setting to transition into retirement into the next 10 years. And it's estimated that only 30%, such a small percentage of small businesses successfully sell or transition to that second, third generation or to external people. So if we're really worried about the business and what we can do to help, we need a formal buy-sell plan in place. So at the core, what is a buy-sell plan? It's about creating a legal binding contract that provides the easy transfer of ownership upon a triggering event. And it's death, it's disability, it's also retirement. Oftentimes you'll include things such as divorce and bankruptcy and voluntary or even involuntary separation. We know a lot of time business partners come together, but then they separate. And so again, much of what happens during the life and these transitions happens during the lifetime and not at death, but we need to make sure that we are taking care of that just in case. So it is truly important, right, to have a buy-sell plan. And why is this, right? It gives us a guaranteed inside buyer, right? Sometimes if that is not, something happens and sort of it becomes this, landscape where we don't know who is going to deal with the party of choice. Is it going to be, my husband, my partner? Who is going to come in and interplay, right? We also know that liquidity, right, especially in a partner situation for that selling owner, becomes very vital. How are we going to buy out certain shares? And then the price of the business, right? That's an ever-moving target. And so we need to set a fixed fair price and value. It's got to be arm's length. It's got to be reasonable, right? And so these are all things that come into play for estate tax purposes and really providing that certainty for all owners and their families. Life insurance becomes a key and integral role here, right? We know that we need the cash to provide that death benefit for that owner, right? It provides that liquidity. And then there are other, more, a lot of times I see term insurance as part of the solution, but permanent life insurance with cash value can also help, right? Help with retirement and buyouts, right? The life events that we often forget about with the buy sell plan. Now, what are some of the businesses that we often see? So every business is unique. So we're going to give you a couple of different examples of sort of transitions. So if you have a family business, you're trying to lead that business for generations to come, right? So here it oftentimes becomes about estate planning. It's about who can, and sometimes we have estate equalization problems. We may have one child who's interested in the business and two who are not. So that is more of an estate tax. But when you get into multi-owner businesses, that's where you really are finding these formal buy-sell agreements, right? They're two independent parties that need to have a formal agreement of how we're going to transition those in the event of death, disability, or retirement, right? And so who's going to receive what? How are we going to create that liquidity? We also, find that in single owner businesses, there are many out there who may not have a known entity. And so in those instances, the business might be sold or perhaps there's a key person. So that comes again with a different set of challenges. Today, we're going to focus in on that multi-owner business, that traditional buy-sell model, because I think it's the most important one to understand because it comes with a couple of different complexities. But here's the thing. In buy-sell planning, there are several types of buy-sell arrangements. And so we're going to cover both traditional buy-sell options that have been around since the dawn of time, but we're going to explore a couple of different options, perhaps some that you haven't heard of before, in light of what's happening with regards to the Supreme Court ruling that's out there. So what are some of the traditional buy-sell options? Cross-purchase. So this is as simple as this. I am going to buy out my partner. My partner is going to buy out me, right, at death. So we each are going to own policy based off of each other, right? And so each business owner purchases life insurance policy on the lives of the other owner. In an entity purchase, sometimes called a stock redemption plan, the agreement, so same scenario, is between the entity and the owner. It's the entity, it's the business that's ultimately going to buy that life insurance policy, right? They're going to be the ones who have the liquidity to be able to purchase out the shares of the individuals. And there's pros and cons of each one of these, so we'll cover that as well. So a cross purchase arrangement, again, it's each individual owner. So what are the consequences? Well, because I own a policy, say on John, who's here, and he owns a policy on me, and we're able to produce a death benefit and buy out the shares, we do get a cost basis increase on our shares, right? There can be capital gains, but here becomes the problems. With two individuals, cross purchase can be effective. It can feel simple. But if we had a partnership with 3, 4, 5, then we have multiple policies. Now I all of a sudden am owning policies on multiple individuals, and same thing vice versa, right? And so the other thing too to consider is each and every year the business might be increasing in value, but again, the entity value has not increased, right? If we buy a predetermined amount of life insurance at the onset, right? Now, consequently, a lot of individuals will do entity purchase arrangements. And again, that's where the business, the entity, has a right and obligation to buy the business interests directly from the parting business owners. And they're the ones who are going to own the life insurance. But because it's the entity and not each other who has this, the consequences is we don't have a basis adjustment. We don't get a step up in basis, right? Everything, including the life insurance, is a risk of corporate creditors. If the entity goes bankrupt, you fall in line with sort of the bankruptcy reporting. And the consequences for the entity is, a lot of times everyone's looking for that tax deductibility. Premiums are never and are not deductible. It can possibly increase the value of the entity. And we'll go through, again, that case example, the Connolly case momentarily. And 101J applies. And so this is a formality that we must know. anytime a business owns a policy on an individual, you have to follow 101J. And that's with notice and consent before the life insurance is applied for. And then each and every year, you have to file 8925. So this is a formality. If you have an employer-owned contract, there are formalities, including consent, beforehand that we need to put into play that are becoming important. And so these formalities are things that keep in the back of your mind, but one of the things about entity purchase buy-sell arrangements. So again, so let's sort of stack these side by side and say, okay, well, which one is better? It depends, right? So cross purchase, if you have too many owners, typically we're now sort of gravitating or have gravitated towards an entity purchase. If there's a big differential in age and in health, right? I'm buying a policy on someone who might be older, and so I'm paying a higher premium than if I was younger, or vice versa, right? Where are we getting those premium payment source? Are we taking distributions from the company, right? These are individually owned. And then there's this whole notion about mistrust. And if you don't put in your contract what happens to the policy, so that's part of the buy-sell agreement. If I pass away, and again, John owns a policy on and then my estate owns a policy on John's life, how do we get that policy over to John, right? There's no longer that relationship. And so it's that mistrust that could ensue if we haven't really thought through the details. And entity purchase, again, some of the common drawbacks is that loss and step up in basis. Owners may not have that pro rata increase. And again, it's that whole unwinding of policies. If we retire or sell the business, now we have a business that owns a contract on our lives. But to add to this, on the docket for entity purchase buy-sell, we've recently had the lower court and now the Supreme Court rule on this. And so a lot of business and estate planners are questioning the future viability of entity owned buy-sell. So let's go through sort of what happened. And so this is US versus Connolly. You had two brothers, right? And they owned this construction company. Okay. Now, the entity redemption that was created, it had these very specific formalities. They needed to sort of every single year apply a valuation, and they never revalued the company, right? And then the other thing that was interesting, even though Michael had a 77% business share and Thomas only had a 22% business share, the entity bought the same amount of death benefit. So it should have been differentiated, right? But same amount of death benefit was purchased on each brother, which raised some eyebrows, right? And so they say, in the courts, bad facts lead to bad outcomes. And so this may have been that case. But ultimately what happened is Michael died in 2013. Again, there was no appraisals obtained. There was negotiations of sales with Michael's son based on an agreed upon value. Again, nothing was formalized. Everything was done sort of informally. And at the end of the day, when they sort of tried to value the estate, based upon the agreed upon value, right? Because remember, your estate has to value that business interest at time of death. And what this caused was an IRS audit. And the IRS audit, I think, came to a shock for all of us because even though the death benefit is coming into the entity, it's automatically being sent out to redeem shares. But the IRS doubled down and claimed that the $3.5 million death benefit of the corporation should be part of the value of the corporation, thus increasing, right, the actual value, even though that there was this contractual obligation to redeem those shares. And it came down to some nuanced, right? It's always nuanced. It's not sort of black and white. But there was this requirement for fair market value and method of determining it. And so at the end of the day, the owners ignored what was part of the entity agreement required so by the IRS. And without that agreement to consider, the death benefit they claimed could not be offset by an obligation. And therefore, they included that death benefit as part of that entity. So creating sort of this, eighth court decision. And there's been a lot of sort of talk about, well, is entity redemption off? Well, it is before the Supreme Court. right? And so we don't have final rulings, but we're watching this really closely as buy sells are living, breathing documents, and they should be regularly reviewed. So, was this a case that the all entity buy sells, even if they don't follow formal agreements? Do we now believe that the death benefit will automatically inflate the value of that business? Should we consider reviewing existing entity buy sell arrangements? I don't think that that's um, something that we have to necessarily not do. I actually recommend we probably should do and should probably review with counsel and CPAs if we have been following the formalities, right? And then there's this opportunity today to really exploring mitigating some of these entity agreements, in an alternate structure, such as a special purpose vehicle. And I'll be covering insurance LLCs momentarily as sort of additional ways or as in lieu of entity redemptions. But again, we haven't heard the final ruling. It went before them, and we're just awaiting to see what is going to happen and take action appropriately. But I do think, right, that we should be following through and reviewing those entity purchases. And again, I will say, the sale of a business is the number one source for assets under management. So this, by doing any type of buy sell planning, it helps us get in front of that opportunity today to help with that succession planning. So I covered sort of the traditional buy sell models that are before us, and I'm going to cover the insurance LLC that was teased as an alternative to that entity buy sell. I think it's a viable option. It comes with some considerations. But before we go there, I want to start talking about one of my favorite alternatives, which is a combination of some of the traditional benefits, and we here call it at John Hancock a cross endorsement buy sell. And this sort of combines some of the benefits that we saw of both, but it also helps us with unwinding of the policies. And I'll explain. So, in a cross endorsement buy sell, I own my policy, John owns his policy. So, we take care of our own policies by permanent life insurance. And here's where the difference is. I endorse the death benefit to John. He endorses the death benefit to me, right? Whatever the value is. So I can buy a policy that's greater than what I need for my buy sell obligation, leave, some to my family, but endorse what I need to John. And that rental fee for that endorsement, we call it an economic benefit. So think about it as, what would a 1-year annual renewable term cost for me to rent out John's benefit and for him to rent out me? And so we just have to account for that and reconcile that. But here's what the real, this is sort of what is the benefit. When someone dies, the death benefit endorsed gets received to the other partners, but the other partner owns his or her policy. And they can rip up the buy sell agreement, but there's no having to transfer that policy. There's no need for us to pass it back, right? So it's an easy unwind. Same thing if there's a retirement. And I will talk about long-term care as being part and integral of this benefit. And again, any death benefit exceeding the endorsed amount, right? If I buy more than I need, will go to my designated beneficiaries, right? And again, if we reach retirement and we've bought policies that have built up cash value, we can rip up the buy sell agreement, use the cash value to either supplement our own retirement plan or to fund lifetime buyouts of businesses. So it makes this buy sell arrangement a little bit more palatable. It puts that control in the right hands of each owner. And again, the only thing that's happening and occurring is that there's this economic benefit, which is probably something of a mechanical thing that we think about. You're just renting out what that 1-year cost is. So in this instance, we have $1 million being endorsed over. We have someone who's 45 and someone who's 44. Again, the rental charge is $550 for one, $590 for the other. That does rise, right? As we get older, as you can imagine, annual renewable term does also increase. So, but it's still a lot less than if I had purchased a policy, especially a permanent policy, on each other's lives, right? It's sort of a fraction of the cost of what is needed. And then I own my policy. So let's look at, again, the traditional buy sell plans as a reminder of what was sort of some of the places that we were concerned about. So we were concerned about step up in basis. We were concerned about premium funding patterns, right? Someone was, a lot older. We were concerned about transferring policies in the future, either due to death or retirement. And again, in the traditional buy sell models, typically long-term care riders, because they're business owned or they're meant for this, are generally unavailable. So with a cross purchase buy sell, I'm getting a little bit of feedback. With a cross purchase buy sell, just as a reminder, each shareholder would have to own their own policies. And remember, it became sort of not something that we'd want to do with probably 3, 4, or 5 more. Younger shareholders, again, are going to have to pay for a higher premium. Transferring the policy in the future may create a tax liability. And again, the long-term care rider would not be typically available. So that's where this advantage of this cross endorsement buy sell really, really is one of those things that I would encourage each and every one of you to consider, right? You have long-term care protection, because I can buy a policy, add long-term care, and at retirement, we can rip up that buy sell agreement. It's easy execution. If something does happen, again, I own my own policy, endorse it over to John. John gets the death benefit, but then, the policy he owns, he can just say, I no longer have to, we've terminated, we've bought out the person, rip up the buy sell agreement, right? And again, it provides this flexibility because each owner is funding their own policy. So if they want to have an accumulation product, or they want to have a protection, or if there's a difference in age, each one is only responsible for their own premium payment, and all they're doing is endorsing, which has becomes a fraction of the overall cost. So truly just something to think about in terms of cross endorsement buy sell. Again, you don't need multiple policies. The endorsement can also cover multiple owners. So if I had 10, partners, I could have 10 endorsements on my policies. You can also really easily customize by every owner. So if not everyone is an equal partner, one has a greater partnership, you can do that fairly quickly with that endorsement. And again, because it's my own policy, I can buy more death benefit, or I can do an accumulation type product. I can add long-term care. And so those truly are benefits that you aren't going to find in your traditional buy sell models. Now, here are some considerations. So if you have, corporate owners, you are going to have transfer for value issues, right? You may have potential income and estate tax complications. So you need to make sure you're in compliance with split dollar regulations, right? But again, this does work fairly well for most business owners, right? They are able to control their policies. They're able to add long-term care, and they're also able to really help with specifically with partnership relationships, because that avoids that transfer for value. And to be honest with you, a lot of the business owners who we work with fall under that category. So we don't have to think about transfer for value issues. So now let's go to insurance LLC. So I teased this at sort of when I was talking about the Connolly case and, our entity redemption buy sells, are they all out the door? And again, we're waiting to see what's going to happen in terms of the Supreme Court ruling. But I do think insurance LLCs may be attractive solutions to help. So how it works from a very generic standpoint, an LLC is taxed as a partnership. You draft the buy sell. The LLC purchases insurance on each owner. So it functions almost similarly and mechanically to an entity owned. The LLC is going to make ongoing payments of life insurance premium. And again, the entity is going to, buy the life insurance and then be able to purchase the shareholders if and when death occurs, right? So the benefits is simplicity, especially again, if we take entity buy sell off the docket, if we want to keep simplicity, because we really like that with an entity owned product, it was one entity owning it. This offers the same type of benefit. It promotes equity amongst owners. Because it's within an LLC, you do have that creditor protection. And then there's sort of this flexibility to add or remove owners with relative simplicity, right? It's done within that LLC. You do get up that step up in basis, which I know is so important, right? As part of this. And it also limits that transfer for value concern. So if you have those corporations, you're worried about transfer for value, maybe SEBS is not an option, but maybe an insurance LLC is, right? So, some of the considerations has to do with the estate tax. You have to work really well with your attorneys to ensure that the terms of the LLC do not create estate tax inclusion. Again, because this is owned by an LLC, it's an entity, 101J, that notice and consent and that annual requirement is still going to continue to apply. And you have to continue to manage coordination with the planning team. So again, this is really, really a good opportunity for those individuals who, a multi-owner businesses. You have lots of partners, owners who want more control over their policy. And again, corporate S or C corp owners who have transfer for value, which maybe SEBS is not, again, because of that, may not be a good fit. This probably will. All right. So now let's talk about, we've spent a lot of time talking about the types of buy sells, but one of the part that is most integral when you're talking about buy sells business valuations. And if you think about this, right? If I asked each and every one of you sort of what the value of your house is, we could go online, maybe use an online tool and with relative ease, find what the value of that is. If I asked you what your 401k or qualified plan was value, you could pull that up. Business valuation is one of these things. I think we're getting there, but it's a little bit of an enigma, right? And so this is one of those things, depending on what side of the party you live on. If you're the selling person or you're trying to do it for estate tax purposes, like if I was selling my business, I'd want the highest value. But if I was trying to account that for estate tax purposes, I may want to devalue it. And the bottom line is that there are multiple business valuations. So we'll go through a couple of them. So the simplest one is book value. You take your assets, subtract out your liabilities, and that is your book value. That works well when assets, think real estate, are part of that business. It doesn't work so well if you are in a service industry, like a financial advisor, right? Unless you own the property, most of us may not have assets or liabilities. So then we can move towards a capitalization of earnings. And so we multiply our historical earnings by a capitalization factor. So that's another way to value your business. Or you could do discounted earnings, where we take the future earnings, forecast them, and then discount them to apply that valuation. We could do a hybrid model. The most, accurate one, I would say, is a formal appraisal, using a professional appraiser to value the business. But generally speaking, these appraisals cost, thousands of dollars, right? And so a business owner generally is not getting that appraisal annually. They're doing it typically when there's a triggering event, right? There could also be a fixed price based off an agreement. So when we have all these business valuation models and we need it, right, to determine the right amount of insurance, what is one to do? Well, I'm proud to say that here at John Hancock, we have a business valuation online tool. You can go to jhsaleshub.com, click on advanced markets, and it's under our tools. And you can get a book value, a capitalization of earnings, and we will provide those values. Are these values 100% accurate and should you use them? No, but they're a great starting point to help you understand the business owner you're working with, to help move that sort of along towards succession planning and business valuation, right? We need that in order to determine how much is needed, right? How are we going to transfer that? And ultimately, how much we're going to apply for life insurance purposes. So it's very important. And we need to make sure succession plannings are put in place, right? And we also need to make sure that they have been funded. And we also need to make sure that they have been updated. I have been in the advanced markets group since 2007, and I at least run into this once a month, where we find a succession plan that has been created, never funded, and never executed. And so again, it's following the path, it's updating it, it's making sure that we know. And then I always love to sort of provide you at the end, because we've talked about solutions that can help our business owners, but what are some of the key questions if I was out on the field that I would ask? And so the first one I will ask you, if you ever call into the advanced markets department, I will ask you, how is the business structured? Are you an S corp? Are you a C corp? Are you an LLC? Are the business owners related to one another? Is the agreement between all the owners or just some of the owners, right? Sometimes we run into businesses that have minority owners. What are the triggering events for the buy sell obligations? Is a buy sell obligation voluntary or is it mandatory? And for family owned businesses in particular, what is the management succession plan? It's not so much we know we're going to transfer that, but what is that management plan, especially if we have one that's in the business and one that is not? And who is designated as the buyer, right? And that becomes really, really, really important, right? And how is the price determined? Here's the key question: is the buy sell adequately funded? If you run into a business owner, they said, you know what, Anna, we've done our business planning, thank you so much, but we did it back in the 80s. Even if they purchased life insurance, I can probably assure you that that needs to be reviewed, right? That it's probably not properly funded, and that we're probably, assuming that the business has grown, which is a good assumption, that we don't have enough. And also looking at some of that formalities, right? We saw that with the Supreme Court case. We need to make sure that the formalities are 101J if it's entity or LLC owned. We need to make sure that we are following those formalities. Same thing in the estate planning world, in order for things to be respected and for things to go as planned, right? And we need to continuously update it, right? So those are some of the questions. Again, we have a lot of questions that you can ask. I won't go through these line by line. I think some of these are really important. Some of these things, a lot of times business owners, we have to sort of have them visualize what it would be like. And so you can say something like, would you like to be in business with your spouse, with your partner's spouse or children? And a lot of times the answer is no. So what are we going to do to buy out, right? Are they able to continue the business, right? There are some professions, doctors and lawyers, where you actually need a degree in order to continue that business, right? And so there are all these questions that we really need to ask to get to the bottom of understanding not only the funding, but also understanding the landscape of who it is that we're trying to help, making sure that we are following this. And the last one is making sure if you do have an entity owned or business owned insurance, including key person, that 101J has been complied with and followed with. And that's a really important thing to think about as well. Here in the advanced markets, who I represent, we have a slew of resources. I will tell you our number one resource is our advanced markets consultants, who are able to model a lot of these buy-sell plans. We have attorneys on staff, and so it's that human capital. But in addition to that, we have a whole slew of marketing tools and resources. We have a buy-sell client guide. I talked to you about that online business valuation calculator. We have some sample legal documents. We have consumer guides on insurance LLCs. So we have a lot of really good resources, but our first and foremost is our human capital. So with that, I'm going to turn it over to questions. And again, if you need to reach us, this is the phone number to reach the Advanced Markets Group today and make my compliance department happy and show you the lovely disclosures.
Very good. Any questions for us, for Anna? Anna, one thing you said, you referenced it several times, but it's really important to remember, when we think about life insurance planning, one of the most fundamental things we do for personal life insurance is ask the questions and always the policy review, right? We constantly talk about policy review, and it's a great way to prospect and just get, you can have a conversation at a bar, at a party, and ask somebody the question. And we see that as such a powerful tool, and it really is, and it really gets us in the door. Well, I suggest that we all think about extend that policy review into the business market. And so, to what Anna was saying today, reviewing, do you own a business? Do you have a succession plan? Do you have partners? But getting into whatever agreement you have or whatever documents you have they been reviewed? And then, that leads you into the life insurance contract review. Is it funded with life insurance? Have you reviewed those policies? Are they still functioning? Are they still what you need? Needs have changed. You may have bought them in the 1990s and a lot's changed since then. Are these policies working? Are they going to be there? Are they in danger of lapsing? So all those fundamentals of policy review can be applied here and very effectively develop business clients and with the simple questions that we ask to really get clients thinking. And that's the main thing, is to get them thinking about this. And even in some cases, get them scared that they need to do something. It's really it's a wake-up call for a lot of them. And these questions will help you get there.
Yeah, and I think leveraging what's happening today, right? And so even if your client doesn't have an entity redemption buy sell, just being able to say, hey, did you know that there is a Supreme Court case following entity buy sells? I want to reach out to you in the event that that's just something that you have in place. If you do, let's review it and let's, come to the table and understand it. If you don't, maybe you should have some sort of buy sell planning and it's up in the air whether or not entity will continue to live post Connolly, but it's that opportunity, that relevant opportunity to get a conversation started. Great. Well, I don't see any questions. We must have been very good with it. But if there's anything that myself or John can do to help you, we are here to help in any capacity, whether it's business planning or estate planning. And we truly appreciate the partnership here.
Yes, thank you so much. This was wonderful. This was such good information. I apologize. I have to turn my camera off to talk technology issues today. But thank you for this. It was super informative. Are you able to send along the slides, Anna, so we can share them with all of our registrants today?
Absolutely.
That's wonderful. Thank you so much. And if there are any questions, please feel free to reach out to your contact at CAPL. And of course, we will loop John and Anna in with any questions that we have. So thank you so much. This was great.
Thank you, everybody.
Have a great day.
Thank you. Take care now. Bye-bye.
Bye.